Hello and welcome at Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we will talk about Uniti Group Incorporated, traded at Nasdaq, ticker name Unit. Well, Unit today finished with the white candle with some, let's say, downwards shadow forming like a hammer formation. And if you look during the daily trade, you see there were actually two major waves. And before the closure, it was some rally which actually formed the formation kind of this, let's say, hammer. So the upper part, the body of the candle is not that strong if you look at this price action. But overall, of course, for a company with market capitalization 2.62, we finished rather well. And this small spike at the end means that actually there is a good foreseeing for next week. And overall, it is expected that company is recovering from the correction that took place, and we see that correction on take was by 10 of February, and it finished rebouncing from moving average 200 by March 6. So with this, actually the correction finished, and now we are going up. It's a bounce recovery, which is very nice one, and we see also that there are strong indications of, let's say, major recovery sequence. Still, we might see some waves, some channeling, but we will now talk about this. So first of all, as always, at our daily charts, we have three moving averages depicted here. On the left, you see the legends. These are moving averages 20, 50, and 200, being green, blue, and red line correspondingly. Here you see them. So as I said, by beginning of February, actually by 8th of February, the correction took place, and then the price declined all the way down until we faced moving average 200 with two very rebouncing candles here with big downward shadows, and by 6-7 March the rebounce was finally confirmed, and now we made the first rebouncing wave using moving average 20 here as a first resist and volatility level, very classical behavior. And then usually you have the higher bounce of the next rebounce wave, and it seems like the next rebouncing is starting. So we might go now again all the way until moving average 50 here, and then make a third wave, etc. And this is the way to trade. So this is the way to trade, and there are two possible rebound scenarios or recovery scenarios. So one recovery scenario is immediate recovery. The one actually we saw similar one, immediate recovery by correction that took place in October. It's actually a very classical example. You see one bounce by November, then second bounce with higher lows, and then we go bouncing growth. So this is immediate recovery. That could be one scenario in current price action as well. So if it happens, this could be an immediate recovery, maybe with some kind of angle like here. Or what could next be happening, it could be a flag formation, and then recovery. So it could be a little bit delayed recovery. So and flag formation would mean that we might start forming kind of a flag. The angle is still not completely clear. You could a little bit hypothesize, and then from the heights as well. So could be like this, could be a little bit higher. It depends on where the current upwards wave, let's say, will finish. So where this wave will finish, let's indicate it with the arrow. So it depends where indeed this wave will finish, and then we will know where we are if we are forming the immediate recovery, or we are forming the triangle. So the first scenario would be immediate recovery, the second scenario would be triangle, but in both cases we will be prepared to trade. We will know how to trade, and also we will know what to do if this will be cancelled and we just decline, which is very let's say improbable situation, but still we need to be prepared. So let's call the possible immediate recovery line R3, and then we give it a question mark, meaning that still the angle of it is unknown, but we anticipate it as a one scenario. And then if this would be true, actually, and then we can call let's say the lower part of possible triangle also R2 with a question mark. So both scenarios are probable. So in both cases, you see they are in the vicinity of each other, even with some anticipation of angles. So this would mean that still some volatility might take place, but it is advised to already buy anything below moving average 20 and actually 11. So that would be the first entry opportunity. And another important parameter here which tells that we are indeed going to recovery is moving average 20 is bending now upward. So it goes like this. So it's going like this. So this bend is taking place. This is very important. It means that it could be pierced then with the price, let's say, going high, down, and then high, so zigzagging, and then really going for recovery. But this is very strong indication. Whenever you have it, it means that the recovery is there. So it's an immediate buy already within the current price action. Let's write it here for us in numbers. This would be between 11 and moving average 20, which is currently at 11.47. So this would be the first entry, expecting for recovery, and then once recovery takes place on the first wave, you could make the profit already. And if you are a daily trader, we always advise taking profit at 10 to 15% from the money allocated in the position and the portfolio for the current stock. So just take it really, then either re-enter or check other opportunities. We also post many videos daily, and even those that are up to 5 weeks ago posted at our channel are still fresh, in a sense that the situation discussed there could be just happening, especially if we're talking about lower levels of defense. You could be right in time to make a profit there. So check those videos, and never be too greedy, never wait too long, because the stock might expire, meaning that it will change its trend, so you won't be making profit anymore. So once you have it, take it, develop this tradition and this culture of making profit from multiple trades rather than trying to become rich from one trade. So first channel 11.47, and then if we rebounds, indeed you can take the profit. Should we maybe decline if this is broken? You never know. This is also possible. Maybe some, but on this it should be immediately some negativity there. We could still try to retest lower, which would be from technical point of view not that, let's say, probable, but you never know if this situation is happening. Then of course, if we decline, if there is some rejection, maybe based on some negativity, then this would be the channel to enter again and actually average down. Let's draw it with the circle. So this would be between 10 and 10.50 as a second entry. Still, let's say, mixed technical and some kind of news negativity, because it's already very bullish, the stock itself, and it's very actually nice to buy already, and it's not really expected that it might be declining. But still, if happens, you know what to do. You can average down the second channel there, and then again at any rebounds you can take your profit up to 10 to 15% as we discussed. What to do if it declines even lower? Well, this should be done only due to negative catalysts coming in, and these are usually not expected, not anticipated, but you always need to be able to cope with this, to deal with this, and if you want to do it, you always need to keep some funds for the very principal levels to average down and to enter if this is happening. And then speaking of this, it's very simple. In this case, you can just go to this very principal level that was traded many times, also last half year, especially in July, November action, and this channel, let's call it S1, S2, is purely negative news based, negative catalyst based to be more precise, and then you can enter here if this is happening, with the price levels being between 860 to let's say 930. It's not that it is expected, it's not that it is predicted price, it's really a mitigation of risks. This is part of our mixed analysis paradigm, where we do 3 in 1. So one is technical analysis, second is discussing nonlinear and average down based on support resist levels. That's what we do with our levels to enter. And the third one is actually mitigation of risks due to possible negative catalysts. And these risks can be mitigated only and mainly by looking at the very principal levels where the price could go if there is something happening. And those are at the moment for the last half year, actually the channel S1, S2. So with this being said, that's actually it for a unit. The way to average down would be 1 to 2, still very classical, very bullish, meaning that the funds you would like to play here, you can split in 5 portions. And then you can buy with first portion in the first channel, so you slowly start entering there. Then if price declines further, you can buy with 2 portions of your money allocated for this stock in the second channel, and then you can buy again in the third channel if the price declines on the negative catalyst. And what does it mean to buy in the channel? It's not that you buy immediately at the top of the channel, but it also doesn't mean that you need to wait till the bottom of the channel, because this might be not happening. Imagine price is going down and you would like to buy in the second channel. So if you wait until the bottom, maybe it will already reverse in the middle. So the way you need to enter is that you could sub-split your, for example, 2 portions at another 2, and then you can buy with one immediately when the channel opens and with another one somewhere lower. So this way you will be in the middle of the channel with average price, and then you rebalance the best way. You take the best profit once the rebalance takes place. So this is also important to buy slowly. And indeed, this approach, what we propose, it's really requiring self-control. It's requiring actually knowledge of what you are doing, believing in what you are doing, and actually keeping emotions under control. Not buying too fast, not buying too slow, just doing it on steady state. And this is usually the biggest problem for traders, because it's not a problem to understand the stock, it's not a problem to understand the technicality, it's the problem of self-control. This is the key for stocks trading. So with this being said, this is the numerical card for trading. If you are more for graphical representation, you could look here. In general, this is so-called trading card for the position. You can print screen it, use it, print it out if you like somewhere, use it as your guidance for trading and making a profit. And on this being said, good luck with unit. Also, do not forget to subscribe to our channel if you're first time watching this video. Press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.